Action taken by governments around the world to tackle COVID has needlessly devastated economies. This is most evident in the UK, where businesses are struggling to stay afloat, and what would normally be dependable dividends from stocks have been slashed, axed and cut.
The UK has traditionally been the go-to country for equity income, with the FTSE offering some of the highest yields around. But 2020 has been a year to forget. Even historically reliable payers such as Shell and BP have turned their backs on their payouts, leaving income investors high and dry. But chill, there are still some very heroic stocks out there paying very generous and healthy dividends if you look hard enough.
In this video, we're looking at the best UK dividend stocks heading into 2021 and a few other ways investors can still obtain superior income, including the best dividend ETF. Stick around to the end and we'll even give you a few of our top tips in how to find great dividend stocks like we do. Let's check it out. Welcome to moneyandshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
All of the stocks and funds mentioned in this video are available on Freetrade, and Freetrade are also giving away a free stock to new customers who use our link. You'll find this link on our offers page, along with many other awesome bonuses worth thousands of pounds. BAE Systems. This stock is a dividend paying machine, but it almost lost that status due to COVID fears. It deferred its usual April dividend declaration, but in July it made the decision to restart the dividend, including restoring the missed payment.
This means that BAE Systems has continued its awesome track record of increasing dividends for decades. We would have to go all the way back to the early 1990s to find a time when they didn't increase the dividend. It currently has a sweet forecast yield of 4.81% and a healthy dividend cover of 1.9 times.
A dividend is only as good as a company's ability to continue paying it, and BAE continues to grow its business, with revenue slowly growing year after year and its profits following suit. So, why is BAE so good at generating consistent business growth that allows it to continue paying sweet dividends?
BAE Systems is a defence, aerospace and security company. Think fighter jets, naval guns and aircraft carriers. This line of work is typically big contracts with national governments that span many years. The UK and US are BAE's main customers, and tensions around the world are only heating up, so a significant portion of existing defence contracts will be deemed critical and should go ahead as normal despite short-term economic jitters.
This is a stock that I've owned for many years. The share price is a bit of a roller coaster, but you invest in it for cash flow and relative safety, no matter the state of the economy.
British American Tobacco. This is a stock we both own. As you can probably guess from the name, they are in the tobacco industry, and are in fact the world's biggest tobacco company, having taken full ownership of Reynolds American in a $47 billion takeover bid in 2017. BAT is now a £61 billion Goliath with annual revenues exceeding £25 billion. BAT has operations in around 180 countries, and its cigarette brands include Dunhill, Kent, Lucky Strike, Pall Mall and Rothmans.
Like the other stocks in this video and other excellent dividend stocks, British American Tobacco is another defensive stock, which means it delivers consistent dividends and stable earnings regardless of the state of the overall stock market. This is a key reason why companies like BAT are great investments during economic turmoil and make great long-term investments.
We've got a video coming out very soon where we show you how to pick stocks with economic moats. So don't forget to subscribe if you don't want to miss that. This is a stock that we think has a wide economic moat, which protects its earnings and allows it to earn awesome operating margins. Also, its customers keep on coming back because they are literally addicted to the product, and cigarette companies have awesome brand loyalty.
The company's management have committed to a 65% dividend payout ratio, which helps to reassure cash-hungry investors. The forecast yield is an eye-watering 8.5%, which is usually a sign of an imminent cut, but its fundamentals still look solid.
Revenues are growing, profits are growing, free cash flows are growing, and so are dividends. The only thing that seems not to be growing is the share price. Oh, and its debt. Normally, debt this high would put us off an investment, but we know it is mostly coming from a Reynolds takeover and should go down over time. Watch this figure closely or the dividend could eventually become unsustainable.
Unilever. Our next best UK dividend stock is Unilever. This is a consumer goods titan with a market cap of £126 billion. Its products are available in around 190 countries, which means it's less vulnerable to disruptions from local politics. Moreover, it has over 400 brands, and 13 of these have sales of over €1 billion each.
Unilever is organised into 3 main divisions. It is the largest producer of soap in the world and produces other essential products in the fight against COVID.
The nature of its products as home essentials means that its customers will continue to buy them throughout the year in any economic environment. People will continue to eat and continue to clean and continue to care about personal hygiene.
Unilever's forecast yield is 3.16%, but don't let that put you off. This is a very sustainable dividend that only has a mid-range yield because of its awesome share price growth over the years and the fact that the market expects continued growth in the future.
One thing to note is that Unilever declares its dividend in euros, so in sterling terms payouts may look like the dividend is a bit choppy, but in truth there's been no cut since 1966, an epic, globally leading dividend history.
The financials of Unilever are also solid with both revenue and profit growth over the years, but don't expect consistent growth every year. There is a healthy trend of a growing earnings per share and free cash flow per share, which supports a growing dividend.
I also own this stock, but I don't expect to get mega rich from it anytime soon. It's a very dependable stock, but this is priced into the share price.
City of London Investment Trust. We don't normally talk much about investment trusts on this channel, preferring to choose low-cost ETFs or handpick our own stocks. But when it comes to dividends, there are few investments that can compete with investment trusts.
Investment trusts are companies in their own right, but rather than buy and sell food, cars, drugs and so on, they buy and sell shares in other companies. City of London Investment Trust has raised its dividend for 54 years in a row and plans to make it 55.
The amazing thing about investment trusts is that they are able to hold back dividend income in good years, meaning they have reserves that enable them to maintain or even increase dividends in more difficult years. Economy-destroying pandemics being a perfect example.
The trust is 86% invested in UK equities, and we thought this was enough to warrant a place in this list of best UK dividend investments. The fund is well diversified, with about 90 holdings with key positions in British American Tobacco, Unilever, Diageo, Glaxo and Rio Tinto.
This leads us into a really helpful tip and is one which we use ourselves for finding good stocks. Finding stocks to invest in is very time consuming because there are thousands in the UK alone. One way to narrow that search is to check the top holdings of any relevant fund and then do your own homework from there. For example, if we wanted to find a strong dividend player, we could just look at a high dividend ETF or an investment trust and see what the top several holdings were as a place to start our research. Maybe you don't like the entire fund, but by having a browse of its positions, you may unearth some gems.
The City of London Investment Trust's objective is to provide long-term growth in income and capital and currently yields 5.8%. It has an ongoing charge of 0.39%, which is amongst the lowest of actively managed funds. It is also trading at a 1.26% discount to net asset value and is 12% geared. Finally, unlike other fund types, investment trusts have the ability to use a small amount of leverage to amplify returns, which can be useful when an opportunity presents itself.
SPDR S&P UK Dividend Aristocrats ETF. This is an awesome ETF if you want UK dividend stocks, but annoyingly, it only pays income out twice a year. We have long supported the use of ETFs. Why bother with going through the effort of filtering through thousands of stocks when an ETF can do all the work for you with less risk, allowing you to sleep easy?
This ETF tracks the 40 highest dividend yielding companies in the S&P UK High Yield Dividend Aristocrats Index. The stocks must have a dividend policy of increasing or stable dividends for at least 7 consecutive years.
This is a tall order right now, which is probably why the ETF only has 35 holdings currently. But if you want the best dividends, then there's no room for lackluster stocks. The ETF comes with a very nice yield at 4.87%, but its ongoing charge is a tad high for an ETF at 0.3%.
The fund's performance has had some good and bad years, with 2020 obviously being a bad year so far, down 19.5%. But this is broadly in line with the FTSE 100, which is down about 21% year to date, which is no surprise considering many of the holdings are also in that index.
Here are the current holdings, with most being household names. The average market cap of all the holdings is £18.6 billion, so it's essentially a play on UK blue chips.
Other top tips. Another great tip is to use stock screeners to find suitable investments. There are free ones available, but we personally use Stockopedia as we think the quality of the data is much better. What you're seeing on screen is just an example, but you can apply almost any rule you can think of. Even with the discount that you get through our link, it doesn't come cheap because it is a premium product. But if you are interested in checking out this awesome tool, then take advantage of the free trial on our website, linked to below.
Question of the day. What other awesome UK dividend investments are there? Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.